Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, October 6th at about 1:15 p.m. Eastern. Well, Wall Street's main indexes fell earlier today after the open after a strong jobs report deepened fears that interest rates may stay elevated for an extended period. U.S. job growth surged in September, suggesting that the labor market remains strong enough for the Federal Reserve to raise interest rates this year, though wage growth is moderating. As the market moved through the day, however, today, the main indexes have reversed. They've turned around. And for the moment, at least, they are heading higher. And as I will note in just a few minutes, the mood and the manner of the market has changed from the way it's, if there's such a thing as the way it's felt for the last couple of months has certainly been a lot of it negative to me. Today, it just, again, feels like the whole mood and manner of the market has changed toward the positive. Now, that, of course, remains to be seen in the coming weeks. So for now, anyway, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to look at a daily chart of the S&P 500, symbol SPY. This is the ETF or tracking stock that follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $428.23. As you will notice, it is so far today, it's what we call an outside day. It's kind of captured the price moves of the past 3 days this week. An outside day at the bottom of a move, or what we hope will be the bottom of a move, can be very positive. An outside day we can look at right up here at what turns out to be the top of a move can be negative. So that was a big gulp up here, and it proved to be true. Down here, potentially, not for sure, nothing in the markets for sure, but potentially we have a positive day today, and certainly do at the moment. So as I said, the SPY was trading today when I captured this chart at $428.23. That's about $42.82 on the S&P 500. We're still 11% below its all-time highs in January of 2022 at 479.98. That's what that was. Now, we know that the SPY has been in an uptrend. You can't see March here, but it's been in an uptrend since March lows at about 380. For a lot of this move up since March, it's walked up the 20-day moving average, then gapped up at this high we just talked about on July 27th with an intraday high of $459.44. Now, that remains what we call the relative high ever since. There are we will note relative highs usually mean that the highs before it and the highs after it are lower than it. So this is not an all-time high, but we'll take it. It's fine. So from that July 27th high at about, we'll call it about 460, the SPY dropped back down below the red line, the 20-day moving average, the green line, the 50-day moving average. And on August 18th, it gapped down to open at $433.37. And many stocks gapped down on August 18th. From there, it tried to rally, had a little tough time going through the 50-day and the 20-day, but gradually got there, rallied up to the September high at $453.67. Then couldn't stay there. And if you'll note, look left with me, see this gap right here, the top of this, the top of this candle here, this what turned out to be the gap down, was at 453. So definitely we had some price resistance at that number. And then from there, it fell all the way from this high here at 453. It fell all the way back down through the 50-day, through the 20-day, and down to the 200-day moving average and consolidated for most of the past week. There was Monday, it was a little higher, but from Monday it dropped down. Tuesday, Wednesday, Thursday, Friday. So this is where we are, and it's consolidated along that 200-day moving average this week. And today, again, we do have a very positive candle here. So fingers crossed for the bulls anyway that this will turn out to be a good thing. Now, last week we talked about a potential head and shoulders forming with what we call a double shoulder on the left, then a head. Then we had a kind of a double shoulder on the right. We could do that if we want to. We can draw, whoops, I'm not doing this. We can draw a neckline along here and say that we had a shallow head and shoulders here. However, certainly if it's kind of a shallow head and shoulders, we'll have to see how it plays out. But if it starts to rally here, don't forget that the strongest months of the year, seasonally speaking, are November, December, and January. I'm looking for all the good I can find here. And rates were down a bit today. That's one reason, even though we had strong jobs numbers this morning, which the Fed generally doesn't like, but rates were down a bit. So I'm not sure this head and shoulders is going to play out to the final measured move, which if it happened would take it down to 405, but we don't know that that's going to happen. It looks like and feels like that we could, and the operative word here is could or may, have a rally here, at least in the next short term. So again, so far today, the mood and manner of the market has changed to the positive from what it has been. Again, what I want to see here and what all of us want to see for bulls, we want to see the SPY staying above the 200-day moving average. And you may want to make a note. Right now that comes in at $419.79. So to make it easy, just say we need it to stay above 420. Beyond that, resistance is up here at 434, where the 20-day moving average is coming in, up a little higher to this gap to 438. And if the SPY does drop below the 200-day moving average, we have potential support at 416. If I could draw a straight line, you can tell, but look across the chart here, and then down to 405. But we'll keep our fingers crossed for the bullish scenario. But do keep an eye when you're trading on this 419, 420 line for the SPY. Keep an eye on that. If that starts to fail, then we want to get extremely, extremely careful. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. The Qs represents the top 100 non-financial companies by market capitalization in the NASDAQ 100, including companies like Apple, NVIDIA, Amazon, Tesla, Alphabet, that whole group. Tech stocks and momentum stocks. Now, when I captured this chart today, the QQQ was trading at $363.16, bumping its head on the 20-day moving average, which is at 363.79 cents. And just above that, we have the 50-day moving average coming in at $368. Now, if you look left on this chart, the whole thing tells us, and you can't see January on this chart, obviously, but the momentum and tech stocks have had a great, really sweet uptrend this year from January lows, and you can't see them, but they were at about 262 to up to this mid-July, up here to 388. So we went from 262 to 388. That's a fantastic run, fantastic uptrend. From here, it dipped down, tried to stay above the 20, couldn't do it, fell down below the 20-day moving average and fell below the 50-day. Whenever price falls below the 50-day, you say, uh-oh. And then down to its August 18th lows. Almost everybody had an August 18th low. and this one was at 354. Then it rallied up to September 1st, high at 381. It managed to get through after a running start. It finally got through the 20-day and the 50-day up to 381. Then slid down to right here, down to our lows here at $351.36 on February 27th. And now you can see it consolidated for the past 2 weeks, pretty much at the I'm going to call it the 350 level to make it easy, 351. We can even say these lows came in more at 354, but right here, this is pretty obvious support here. And if we go left on this chart and go all the way back into June, we can find more support at this level, potential price support. So today, again, as you can see, so far we have an outside day. So far the high today is, when I captured this chart, was at $363.16. Now the Qs are definitely standing on a curb here. They're looking higher to see how hard it's going to be to get buyers in to make it back up to the 375 and higher level to get into a more bullish position, or would it just be easier to say the heck with it, slide down below the 350 line, losing the buyers, letting the sellers come in. So this 350 is just a really, really important line. So when you trade momentum or tech stocks in the coming week or weeks, keep an eye on that level and trade wisely. 350, 351. Our final chart today is a chart. We've looked at this chart before in the past. Now, please know with me that if interest rates keep going higher, that is hard on tech stocks. It is hard on tech stocks when interest rates keep going higher. It's hard on all stocks, but it's hard on, not all stocks, but it's hard on tech stocks. However, as we just looked at the Qs, tech and momentum have held up very, very well in the past few months, considering what's been going on. So I looked for an ETF that I thought may be still in the technology category, but maybe not as wildly volatile as some of the other momentum stocks. And this ETF has a lot of good tech stocks in it. So this is the Global X Robotics and AI, of course, Artificial Intelligence ETF. That's not going away anytime soon. The symbol is BOTZ. It has 43 holdings, including NVIDIA. So this is one way to own NVIDIA. Intuitive Surgical, ABB, Keyence, and Dynatrace are some of the top holdings. Now, when I captured this chart today, the BOTS was trading at $24.69, right below its 20-day moving average, which is coming in at $24.92. So I don't know that the 20-day here will cause much aggravation or much resistance if the BOTS starts moving higher here. And the good thing, the 200-day moving average is definitely above. However, it is moving higher. And when a moving average is moving higher above the price of the stock or ETF you're looking at, that is easier for the stock or ETF to move above than one that's moving lower. Okay, now to finish this conversation, since we're here, the 50-day moving average is coming in at $25.97 right now, $25.97. And yes, it is moving lower. But if tech stocks and AI stay strong, by the time that the BOTZ, the BOTS, gets up to the 50-day, if it does, the 50-day will be softening by then. It won't be at such a dramatic angle. So I've got that thought out. Now, let's look back and look at a little of the history here. After making a double top in June and July of this year, you can see that, it was right at the 30 level, so it moved in a very steep uptrend out of April, then walked up at a very steep uptrend at a premium to the 20-day moving average. Now, This is a lot of fun. Nothing could be more fun. But if you get into a move up like this on anything, I certainly suggest that you have a protective stop in at least, or at least a mental stop in, saying when this uptrend ends, you take profits. So because this is a steep move up, and when stocks move up at a steep angle, they're lots of fun, but they sell off too. People take profits. That's a given. So the bots moved up to about the 30 level in June, fell back down to 27 or so in June and July, then moved up again in July, up to that 30 level again and slightly higher. Then it said, all right, I can't do this anymore. Fooled around up here, 28, 29 level, then finally dropped through the 20-day moving average, the 50-day, and dropped down to the August 18th again, to gap down on August 18th to $25. Then it rallied up to $27 up here, got through the 20-day, did not get through the 50-day, then started sliding lower, not quite as dramatic an angle, and came down to the 24 level in the past couple of weeks, as you can see right here. Now, again today, when I captured this chart, the BOTS was trading at $24.69. As you can see here, I've driven a line at 24, a support line at 24 that goes all the way back to past price support in April at about the same level. So we've got potential price support here from the past into today's chart. So, and again, if the market starts behaving badly again next week and drops below the levels I've talked about, then maybe we stand on the sidelines again to see. And if we do get a rally coming here, and I'm figuring it in my head as a short term, maybe it gets longer, maybe it goes from weeks to months, but we have to see. If in the coming week the BOTZ can stay above $24, I may add a small position to my trading portfolio with a stop, and I'm making a pretty tight stop here. You can lower it if you want. I'm making a stop at 23.50. If and when the BOTS moves above the 20-day moving, above the 200-day moving average, it will have moved through the 20. If it can move above and stay above the 200-day moving average and stay above it for 3 trading days, I will add to my position, and of course by then I will be trailing my stop. And right now the 200-day moving average is coming in at $25.45, so you know that. So you may want to keep an eye on the BOTZ in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different online programs, including our popular flagship product, 7 Steps to Successful Trading. Swing trading is one of my favorite things to do and really good to know in a market right now. How to trade the trend for profits. This is less time in your desk chair and more just putting in stops and learning how to trade a trend. How to read charts, great for novices. 3 winning setups, great short-term trades. And bottom fish like a pro. And right now we may be coming into some really good bottom fishing opportunities here. It sure looks like it. So check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.